Okay, what's up, guys? So this is going to be your introduction to time and price and how you're going to view the charts how we do. This is going to be 4 or 5 different exercises that you can do before you actually start trading with your prop firms or whatever. Again, just a quick disclaimer, this is not financial advice. This is just what's helped us view the market, how in the most simple way of starting to get your stepping stones into a complicated world of ICT, right? So this is like baby steps to help you start being able to catch or potentially catch quite large moves in the market at certain times of day, hence the name time and price. That's how we trade. Me and 2Q have spent a lot of time perfecting this and going over stuff and whatever to make it as simple as possible. Remember, this is baby steps, right? To get you being able to see the market how we do. And then the more advanced sort of stuff will come very, very later on. Hopefully you've all now been through the setting up your charts, and then hopefully now your charts all look very, very similar to ours, right? Or if not identical. So the first exercise is going to be your 15-minute, right? So you're going to have all your tools and everything up at the side, and you're going to think that this is crazy, but I'm going to show you lots of examples here. So this is going to be, like I said, your introduction. So first exercise, this is the 15-minute exercise. You only need one tool for this, and this is going to be your highlighter tool, right? And you're going to think that you're like back at play school by the time you finish with this, and you're going to think I'm crazy. We do not backtest the same way as 99.999% of the internet, because our reasoning for that is because how can you go and start backtesting something that you don't even know what you're doing yet? And the answer for me is you're going to pick up a lot of bad habits and stuff like that. So the reason for this exercise, right, is to go back and find perfect days played out perfectly, and that it's going to be like mind training your eyes and your mind to actually seeing that this stuff happens a lot. So first things first, if you have your template set correctly, your template is going to look like this. What I want you to do is come over into the top corner, and I want you to drop this down, and I want you to remove every indicator, right, bar this one, ICT kill zones and pivots. If you have set yours up correctly, your charts should look very similar to mine. What do I mean by that? I mean that your vertical lines should be set. So your midnight, 8:30, 9:30, and 1:30, right? And then your horizontal lines, if I said that the right way around, vertical, horizontal, I think. Yep. So these should be showing on your charts as well, right? So all I want you to do, this is the process, and we call it point A and point B is the very first thing. What do I mean by that? This is now going to start getting your eyes used to time and price. What do I mean by that? So point A, right? We always refer to the midnight as point A, okay? This is this vertical line. Obviously find where it is on your chart, and that's going to be 12 o'clock. Now point B, we are referring to 2 vertical lines. You'll see those. They're going to be close together on your chart. So it's going to make it super easy when you start going back in time and finding point A, point B, right? So this is going to be point B. Now, why have I highlighted 2? Because there's 2 main times if you're looking to do what we do, right? And that is going to be 8:30 and 9:30, right? So when I say, "Oh, have you done your point A to point B today?" right? What I'm referring to is obviously these 2 times or these 3 time frames, right? Bear in mind, remember, this is a 15-minute exercise. You want to be on the 15-minute to do this. The reasoning behind that is basically built kind of around the ICT 2022 mentorship model, right? That's where a lot of this stuff comes from. So you can definitely go and check that out yourself if you ever feel like it. But, right, so getting into it, what's the first thing you should ever do when you get onto a chart or before you get onto a chart? And that is this, right? You always want to come to Forex Factory and check for red folder news event, cough, cough, wink, wink, 8:30, right? So when you're doing your exercise, you're going to see on the 15-minute if the point B is going to be 8:30 or 9:30, or in some occasions like today, both. So what do I mean by that, right? So I know that on this day, because we had a large expansion at 8:30, that it was extremely highly likely there was a news event on this day. What does that make us do? We only trade the 8:30, especially when you're first starting, right? We only look for a trade from 8:30 if it was a red folder news event, mainly a triple red folder news event day, because this is going to give you a nice manipulation, right? So that's point B. If it is not a red folder news event day, I'm not worried about what happens at 8:30. This point B, right, is now I'm going to be concentrating on at the 9:30. So that's what we mean by point A, point B. Does everybody understand that? Yeah? Just let me know in the chat if you do. Yep, cool. Okay, so how can we start marking out the charts to get a better understanding of this exercise? So pretty simple. Point A, point B. Today is 8:30. This is where I want to be paying attention. I'm going to mark out with a scribble the high between point A and point B and the low between point A and point B. So I could do it like that. In this case, right, the 9:30 does sweep the 8:30. This is a little bit less uncommon, right? But it can happen, and it did today. So what am I like displacing to myself, right? Well, I am now displacing from the current day of liquidity. I had buy side liquidity and I had my sell side liquidity, right? Now, bearing in mind, Asia is never going to be involved in point A, right? But if it's been taken like it had before, we're ignoring it. If it is above, like let's say this is the Asia high up here, I would be annotating this on my chart. I'll show you an example of that in a minute. So don't worry, I'm just going to use today as the first example. So all I'm doing is marking out the highs and lows of the day, and then I'm noting to myself, oh shit, 9:30, we swept the low of the day, we've reversed almost on the dot at that time. I'm on the 15-minute, the entry stuff comes later, and I am telling myself that, oh shit, at time, I've swept sell side, I've reversed, and I've gone and took all buy side out for the day, right? So from point A to point B, and you're like, okay, oh shit. So let's go to the next day, shall we? Right? So, and this is your markup, by the way, right? To start with, just those squiggly lines like that. Then we'd come over to the next day, right? So same thing again, right? I would come over here and I'd be like, point A, point B, no news event on this one, or even if it is, it was sort of irrelevant. But now I would just mark out the high, and then we mark out the lows. And at time, what happened? We sweep sell side, we push up, cough, cough, wink, wink. This day, 50% of the range for them pulling back. Okay? So that's another cup I already have. Then we come over to the next day, right? And obviously you can, I'm sure you're getting the message by now. Mark out the highs, mark out the low. Asia was included over here, so I can mark that out as well. Then I'm noting, oh shit, 9:30, sweep the low of the day, or the current low. At time, I reversed, and I push up, and I take the high out. Is everybody with me? Yeah, super, super simple, isn't it? Yeah. Take note as well, the indicator is going to show you some extra lines that are close by, right? They're kind of going to help you with this. Yep, simple as a Pringle, exactly, right? So then we're going to come down to the next day, and I'm going to do the same again, right? High of the day, low of the day. Time over here, oh sorry, time up over here, takes the high, reverses, boom, takes the low. What could this possibly be helping you with? Does everybody think? It's showing you that how price is extremely likely to want to go from one to the other, right? So if we go back over to next week, I'm going to do this super, super quick, right? The previous week, highs, lows, time, took it, went from the lows, went to the high, boom, right? I'm teaching my mind that it's extremely likely. So this here, point B would have been 8:30, right? How do I know that? just by looking that this is a news event. Look at the size of the candle. What happened? We sweep the high, we sweep the low, right? And then, so at time, we took the high, and then boom, we used the 930 to deliver us lower, right? Remember, Asia's a bonus in there. That one got taken. Now, just to show you, right, using your tool, you can mark out the highs, mark out the lows over here, over Asia. There's a 200-point move that you are now, your eyes are really starting to see like, oh shit, this is happening day in, day out, over and over, or within reason, right? Over here, this would be another one for you to annotate, right? 8:30 had a news event. It made up this high over here. We swept high. 9:30 swept it on this day. So that's 2 times you've seen that, right? And then we reversed and then I took there. So 8:30, we are looking to annotate if it was a news event. Did it get swept at the high on the 9:30 and then reversing? If it sweeps one external first, is it safe to assume that when it reverses, it will continue to the opposite external? So this is what we're training our eyes for, right, Sam? So this is just showing you, so for today's like price, so let's just say from the midnight open over to these times, it's extremely likely that if price has been making highs and lows, if we take one side at one time, it's extremely likely that it at least wants to go up and grab something. So, but yes, you're exactly right. Like, so it is, we are aiming, we'll always like kind of swing for the fences, but we're going to drop down and show you a bit more about the strategy in a minute, because you're never holding trades for the whole over thing here. We have to play it safe, and so the limit wasn't full put exactly. Yeah. But so just to show you, right, just quickly, so I'm not going to just keep drawing the same stuff out for you. So one day did it, second day made it 50%, the other day made it full the way, the next day made it all the way. This day was a continuation. So again, you'll learn why we shorted in there and didn't wait for anything else on that day. Here's another day it made it all the way. Here's another day that made it all the way. Here's another day that made it all the way. Here's another day that made it all the way. Here's another day that made it all the way, right? I'm sure you're bored of hearing me now, right? It's just to show you that, holy shit, this does happen a lot. Okay, so a new thing for you now, right? So I am now going to show you what the object tree is, right? So let's just assume, by the way, for your exercise, I want you to do a minimum of 10 perfect days, right? Where you have seen point A to point B, we make a high, we make a low, it takes the low, boom, goes up and takes the high. I want you to find 10 days, right? 10 days with just this scribble tool that's happened. This is going to reinforce in your mind, right, that this happens a lot. So then what you're going to do is you're going to come over to your object tree and you're going to notice that you have shitloads of tools drawn all in there, which is going to be scribbles. Well, this is going to be very messy if you want to like start marking up or anything, all right? So how do we make that how do we make this cleaner? So what I want you to do is you're going to left click on the top drawing tool. So again, this is your object tree. Left click the top one, scroll down using your mouse, come down, hover over the last one, hold shift, and then left click. I think on Mac that'll be a function key, I believe. And then you're going to come and click this box up here, create a group of drawings. You're then still going to have this super crazy, and I'm just going to tick this little tick on the left of it, and now you can see that it's hidden it. And then all I have to do is when I come back into here now, I just hover over this eyeball, and I can now hide all those drawings, right? And make them reappear. Okay. So what do you want to call that one? Just highlight this, right click, hit rename, and just call it 15-minute X, like 15-minute exercise, right? So then now you're just keeping it sort of done. Okay, so that is the be all and end all of the 15-minute exercise, the first step, right? So first clap with mark 10 of those and save them. Yep, exactly. Yep, that's the first part. So, I mean, I'm doing it extremely quick, right? When I'm scribbling it, yeah. But like, you can make it a bit tidier if you want, when you're drawing these, and sort of, try and keep it a bit cleaner if you want. And then you can like highlight, oh shit, yep, 9:30, whatever, and whatever. But this one's just to get your eyes looking at the charts at these point A and point B at time, and it's price, right? So that's the whole idea of it: sweeping price lows, pushing up, taking price highs at time, right? It's like a bit more for your head really than anything else. So you're gonna have all these examples on here now, right? So what you're gonna do is you're gonna come back, and we can use whichever one over here. So we can use this one, right? So obviously, you're going to turn this on and off, and it's going to show you this one. And now what I want you to do is, this is where the markups start happening. And who's just done a couple that were good? We've just had an example of Heavenly Caffeinated, has got some really nice examples. So this next bit I'm going to show you in a second, right? I'll be a bit quicker with mine, but I want you to take your time on yours, right? Because this is quality over quantity for sure. So you're going to come up here and you're going to see replay. I want you to hit the replay tool, and I want to bring it back to like your current day of where price has gone from point A to point B, and where it's taken the buy side to sell side like this. Okay. And you're going to hit your replay tool there. Grab this, by the way, if it does what mine does, bring it down to the bottom. And now I'm going to go and hit the 1 minute time frame. And now it's going to keep me on that same day over here, right? So what are we going to do now? This is where your annotations for yourself is going to be as basic or as complicated as you want to keep it, or as much as you want. Now, in the videos, when you're going through the homework, you're going to start learning what a change in state of delivery is. You're going to know what an inversion fair value gap is, and you're going to know what a market structure shift is, right? If you don't, this is going to really, really help you start learning them. I'm actually going to do mine on the 5 minute just to keep it a little bit more simple, right? So what do? We want to hide that. And this is where you're going to start using your tools, okay? So first things first, right? You might want to start coming in here, and you might want to start marking out, oh, this high was swept, right? So if you have templates like me, it's going to be like, oh, there was a sweep of liquidity here. What time was this at? So I'm now going to be, so I've swept buy side liquidity, right? You could even have that set to your new thing that you've got set out, that all buy side from point A to point B was swept, right? So I could then do, so remember our motto, I could now mark out that this here, right? And I've got templates for these as well. I had a sweep, right? I might want to annotate in there that this is a red folder news event day, right? So I red X3, right? Triple red folder news event. I might want to add in here, oh shit, that has happened, 8:30, blah, 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 right? So they're the extras that you can sort of start adding into that. So I've had a sweep at time, right? So this one is, again, like I said, it's a sweep time. And I want to find where the entry was. So I'm just going to cheat. So we'll just use a 5 minute for this. Obviously, you're going to be on the 1 minute doing this. This was my inversion, right? Because you're going to know what that is. So there was my inversion, right? So I've had a sweep of buy side liquidity at time. What do I mean by that? It was after the 8:30 news event. So from 8:30 onwards, any confirmation of a sell, I can be looking to trade in and target the other side. So that was the time part. So sweep time. Do I have an entry? When this candle here closed below this bullish fair value gap, because remember, this would have started off as a BISI. Why? Because it was a bullish fair value gap. So as this candle here comes in close below, again, once you go through the homework, you'll understand this. You're going to note that this here was my inversion. So that went from a BISI to an inversion. So now I have what? I now have my entry. All right. So there was my entry. Yeah. So you see how you're starting to annotate stuff, right? Again, I'm on the 5 minutes, so you'll be able to be a bit more accurate with this on the 1 minute. And it's extremely likely that the entry is going to be higher on the lower time frame. Not all the time, but extremely likely. What am I doing? All right. And then targets. Okay, so how are we looking at targets? Well, the overall target yeah, is going to be the lower side, right? So you're going to have that this was your sell side liquidity for the day over here in there, right? That was the main low because it's between point A and point B. Where was a bonus? Oh, yep. It's going to be Asia was going to be another target, right? So on and so on. Obviously, this would have been a target. And then what else can we do? So in our model, if I'm trying to trade from point A to point B, and I have taken all buy side, and I am looking for my entry, so sweep time entry target, what am I targeting? Well, overall, it's going to be the low of the day that's been put in, right? Because we know that doing our 15-minute exercise, that's extremely likely to happen. But what about the days when it doesn't, right? So this is where you can start using your other tools, right? So I'm just for this purpose, I'm going to remove all these now to show you each tool individually, okay? So sweep time entry target, what was the entry? What time was it? How did we took buy side? Were we on the way to sell side? So on and so on, right? Now, other tools that you might want to start looking at is your fib that we were using earlier, right? So remember between point A and point B, this from the swing low to the swing high, you're 50% over here. So if we go into there, with the 2022 mentorship model, right? So if this is the low I'm looking at for the day, so we're not even including Asia in this at the moment. If I have an entry up here, my first potential take profit target could be the first significant PD array above or below consequent encroachment of the range, right? So this is the smallest range of the day, right? So it's just from point A to point B. This is 50%. So if I'm selling, I want to be looking for the first significant PD array below consequent encroachment, right? So i.e., I could be looking at this fair value gap, right? 50% of there was in it. Now, again, it's not going to be a very big trade. I'm on the 5 minute I'm showing you. But ideally, it's going to be this one, right? This is the first swing low underneath the swing high and the current swing low, that PD rate of today, right? Now, when you get a little bit better as well with holding your trades, your same tool that you're using, your fib tool, you can bring back down to the actual swing low, which is over Asia over here. And then now you see how the consequent encroachment is now went from this high to this low. This has dropped. So now what becomes the first PD array, right? Well, if you actually look left, it was actually London low, wasn't it? So on this day, it would have probably been a good idea if you, let's say you're on the 1 minute and you enter up here. It's probably a good idea that you did not touch your trade until what? That at least the London low went. If you're being technical about it, it's technically this one here, because inside of this range, this is the first swing low underneath consequent encroachment of the previous swing high and swing low. Is everybody with me so far? Yep. So you might need to rewatch this like a couple of times and stuff, right? But this is kind of like the best sort of way about it. If I just show you an example of like some pretty nice journals, you guys can definitely go and check these. Alpha's got really nice ones. Heavenly's got them. I think Rufus been putting a load of good ones in there. You've got Nuali, who you're never going to see anything like it. His is crazy, right? But I'm showing the basics, yeah? So this is the type of stuff that you can see, right? You know, and you're going to learn a lot more sort of moving forward about accumulation, manipulation, distribution and stuff. But this is an idea of like the things, how you can tag it and start marking it out, right? We've got alphas in here as well. Very, very similar stuff, right? Yeah. You can sort of see it in there. And then you can check ours as well, which is going to be a very basic version, just to keep it simple to show people where we're actually getting in and out of, is going to be inside of your 8:30 and 9:30 markups, right? Notice how all the trades look identical. 9:30, exactly the same stuff again. Yeah, this is the basic version, you know, sweep time entry target and sort of so on, right? You can keep it. So you see how I've got the high and low over there. This is 50% of it over there. Take your first partial. This would be the actual swing low, so on and so on. So that's like the kind of ideas about it. And then, so same again. So let's show you another example of that on a different day, right? So let's say we're in over on this day over here. I can grab my fib tool from the low to the high that was put in. If I have entered a trade in here for whatever reason, again, I'm on the 5 minute, you're going to be on the 1 minute finding these entries. Yeah. Where's the first PD array? Was this one. So that technically is your first significant swing higher, swing low underneath. So you would be holding your trade till here, right? If you're going to, follow what we do. After you hit the first one, right? So we haven't made it to the low of the day yet, but you take a partial off here and you might want to take maybe 65%, maybe it might be 75%. Once that's hit there, your stop loss would come from up here and be moved down to break even. You've paid yourself. If it makes it down to here, that's great. Or let's say like maybe Asia was low over here. And now what else could we be looking for? If this is today, it's liquidity, what else could we possibly be looking for? Previous day high, right? Previous day low. This is how it starts coming in. So your first port of call for looking for the trades is always going to be your session high and low. This one there wasn't a great example. This is a better one. This is a better one here, right? And this is actually perfect. So let's say you come to this day. What happened? We sweep sell side liquidity, which is the current low of the day, at 9:30. Let's just assume that you've now learned all your entry models, which I'm going to show you some examples in a minute, and I'm going to mark it up. You've now swept that, and I'm expecting the high of the day to go. I'm also looking, London low has been taken. London high is a very good target. As a bonus, Asia high would be one, right? So we're looking at that. How do we set that up? Just to show you how many points this is. On this day over there, that is 391 points, and you're doing the same thing every day, right? So how could we look to trade this? So let's see. So we can grab our fib retracement, and we'll go from the actual swing high down to the actual swing low. You're 50% of this range, from this swing high to the swing low, this is your first PD array, right? So you could take a partial here. Let's say you're in from this down here. If you so choose, London high has got some equal highs and equal lows above it, right? You can look to take a partial here and then leave a runner for up over here. Or let's say like, the previous day high was above there. That's going to be an overall as well, right? So you can start seeing about how many points there are in a lot of these trades, right? And how you can start like really expecting what you want, because what's happened? Well, your 15 minutes told you that it's extremely likely that these two are going to get hit, right? So if you're at time, so
John, you might be frozen for a second. Or your mic went out. I think your mic went out.
yeah, sorry about that, guys. The headset died. Typical, isn't it? Yeah. So your 15 minutes already showed you that this is extremely likely to be hit. Well, how many points is that? I mean, obviously, I'm just going from the extreme to there. That's 260 points. You know it's extremely likely to make it there. Remember 50% of previous ranges, right? Swing highs, swing lows, 50%. So I'm just going to show you something of the reasoning for these 50% of the ranges, why we take a partial as well, by the way. If price is bearish and we're doing this, right, and we're making our way down, what's happening, right? Well, we're taking out sell side liquidity, right? But if in a bearish market, we're not just going to drop straight down like that, are we, right? Price likes to make retracements. Why? Because we just took external liquidity. We're extremely likely to want to pull back up for generally what's going to be internal, which is generally going to be from the swing high to swing low, just above or below 50% of a range. So even on days when we're wrong, right, let's say it doesn't want to make it all the way up to the high, yeah, when price is coming up to do that retracement, so you've had expansion retracement, it's going to come in and very extremely likely come in for a fair value gap, right? So if this is your swing high and it's your swing low, and this is 50%, you find that first PD array, swing high or fair value gap, And even on days when this comes up just for a retap and continues, you've paid yourself. This is why we do this, right? And it's the same again on a bullish day. That's all we're doing. So at time, right, so you've had your sweep of buy side, price comes down, yeah, and we're anticipating maybe some sell side, but this is 50% of previous range. Got a fair value gap in here, which ends up holding price. And you've paid yourself, you're now break even, it either runs and continues and you're correct. Even on days when you're wrong, you still make money. That's the whole reason behind it. We tested for 2 odd years on the 4-hour time frame, marked out every breaker structure. Then I went back and marked out the premium discount of each range, which was over a 2-year period. The amount, so after every 4-hour breaker structure, price revisited the 50% of the range 87% of the time. So that's the stat that you're playing with about ranges, right? About in here. So let's just assume that this was a losing or a continuation day of lower, right? So what I mean by that is, let's just assume that we come down and make a low, put this low in, we pull back up, 50% of the range, whatever, and then it's wanted to drop. Like that, you're still getting paid out of it, even though you might be incorrect or sort of whatever. Do you know what I'm saying? So obviously on this day, it pushes way past and comes up. But that's something else that we will sort of cover later on. So is everybody have I missed anything on that 15 minute, do you think, Kuro? Or do you think that's not a bad place to start with it?
I think it's a good place. Yeah, I think you're fine there.
Yeah. Does everybody kind of understand then what we mean by the 15-minute process? So, by the way, you want to be marking out that you can mark as much of this out. So higher day, obviously the lower day between point A and point B. Yeah. Oh, London high was the high of the day, right? The other thing as well, actually. So I'll just add this in. So what you want to be paying attention to as well, right, is here's a brilliant example today, right? Brilliant example. So on this day over here, so let's just quickly turn these off, right, for a second. Sorry, excuse me. Right, so on this day, what did we see? Price consolidated in Asia. We've then kind of trickled up for London, and then we've just been pushing down sort of slowly, right? What have we done? We've been coming down all day. We've come down the swept sell side liquidity, low of the day. Previous day low was over here as well, right? Okay, Gar, so it's a good question as well. The reason for it is because it's the current day, right? So we always want to be playing off of today, of where's the liquidity for today, right? Everything else prior to that is kind of a bit of a bonus. Do you know what I mean? And you'll start learning a bit more so I'm adding it in right now. So previous day low is over here. It's been taken. There was another session or something, whatever, over there. The Asia low had been taken for the day. London low had already been taken. The only liquidity that we have left is buy side really for the day. And what happened? It just shit, yeah. And then obviously previous day high. So on this day, not only did we take all sell side, but we took the previous day low out, and then at the same time we've gone up and take the right of the buy side, which was previous day high, right? And more. The important part to take in, right, is at time, look at what we are sweeping, right? Remember, all of these vertical and horizontal lines are important, yeah? You can kind of see this as a sniper point, right? Oh, at 9:30, I took previous session low, I took multiple others, and I reversed. And what did I target? Well, the only other previous session is here, right? Then the one after that was here, and it made it to it. The one after that was here, it made it to it. Then the one after that was here. And look where price is stopping and at what time. Look, 11 o'clock. So we reversed at 9:30 on the dot, and we finished taking all buy side at what time? 11 o'clock, which is a macro. Okay, so hopefully that's helping a little bit. Now remember, I'm trying to fit as much as I possibly can in one go. We can't show you everything in there. Nope, we never use volume profile. Nope. Time and price will tell us. So if you're approaching, let's say this is your 9:30, right, and I have 10 levels over here, and you're like, which one do I wait for? The way we can tell is at 9:30 or there very close about, you're likely to have that last sort of manipulation. If I then get my entry, which is going to be an inversion, change in state, or market structure shift, time told me here by giving me the confirmation of a reversal that this was the low it probably wanted. Not that one, not that one, not that one, and not this one under here, and not this one under here. At 9:30, this is where it gives me the reversal. This is extremely likely to be the one it wants to use, and then I can target opposing liquidity, i.e. previous session highs and lows, right? So that's kind of like the basics into the 15-minute. And again, you can go in on this. So let's turn on a couple more indicators now. And we're going to start, I'm not going to turn that one on. And then we're going to start seeing about how these other indicators can really, really come in right handy for you. So the first things first is the sessions from point A to point B was already taken. What else was taken? Previous day low. We've taken that just before time. Then right at time, we take one more session and then obviously reversing, right? What else are we heading up towards? Previous day high. That was also on our side. These other open prices, you're going to really start seeing about how they're used to support and resistance and how price can close above, come back down, bounce off, giving you an indication that price wants to, still continue. So you need to hold longer is the key. Yeah. So it's about taking your partials at key levels, right? What do we mean by key levels, right? These are key levels. These are key levels. These are key levels. Super easy key levels, right? Any of these lines over here is where you might want to think about possibly taking something off and then just looking, at time. So like over here, if this is the AM session, 9:30 is pushing, right? And we haven't got to any reversal sort of areas at time, you're going to notice look at how tight, look, this is like 11 on the dot and we've ended at a high. What happened after that? Had a bloody big pullback retracement, right? And then another one at time. Yeah. What else is happening? And it's happening right now. Yeah. You start noticing about these different times, right? We put in a lunch low and we put in a lunch high. What's happened over here? Yeah. We're in the center of it. What's price done? We've pushed up and we've took the session high in the new PM. And we're possibly having a reversal over here. Maybe it wants to come down. Maybe it doesn't. I don't know. But you're going to start seeing that a lot of the time for the lunch, especially like a lunch trade, which is exactly the same. Lunch low, lunch high, time comes and takes it. It's going to go up using time to go and take the other side. Sweep, time, and then have an entry and then target, right? So I do want to just really quickly cover change in state and a market structure shift for you and everything. I'm going to do that using this example here today, right now. But the first time I see any other indicators besides the kills and pivots, John, have you made a video about the other ones you're using here, or will you be explaining them as you go along with the classes? Were you late joining Alpha? It's just mentally hard to take partials when you're going in with 2 or 3 micros to manage risk. Yeah, so that's where you have to be selective where you're going to pick those JSM. And then the good way to do it for your mental side is you have a nice small entry, right? Oh, yes, you were. Okay, yeah, there's a recording already been made about setting up your charts and all the indicators that we use with a step-by-step process, dude. So this is a good question, by the way, JSM, right? So let's say you were trading today, right? And we're going to go with, turn this one off, and here, we're just going to go with here. So just this is going to be a very quick answer for you, JSM, because I want to just concentrate on this, but it is a good question, so I'm going to answer it. So if I've taken sell side at time and I get in, I got 3 micros I'm playing with, let's just say, right? Well, I know from doing my 15-minute exercise that this is extremely likely, right? I might want to think of possibly about 50% in here, right? So I could take one micro off here, take my other micro off here. I'm at break even now, and then previous day high. That would be for my last runner to run to see if it gets or not. Yeah. So if you only have two, that sort of micro is what you're playing with. What are you going to do? Right. Well, so now I'm probably going to take off still here. If you're confident, I'm going to try and let it play out to here, and you can still be moving to break even as soon as this is taken. Right. So it's going to be down to you to see how your risk is going to be applied and how you're going to do it every day. But your targets should always be the same. 50% of the range, I'd probably take, 65% off or whatever. It might be 50%, whatever. Right. My next run at London, I know that this is extremely likely because it's between my point A and point B exercise. That if I've taken sell side, this is extremely likely to get hit. And then my bonus ones, like obviously this one's quite close by, that's how you need to decide if you're going to leave a runner for it or not. Right. But even if you're entering here and your first was here and full TP is here, and you're not so worried about this so much just yet, is that going to start building you confidence in holding trades? I'm sure it will, right? People who come in here who kind of pick it up a little bit quicker than some others are holding trades like very, very quickly. But the key is it to be in with low risk to start with, in a nice sort of thing there. But I want to just talk about these entries just very, very quick for you, and why we tell everybody that we like the inversion for your basics to start with. All right. So I'm going to turn the other indicators off for a second, right? So we just keep it with the basic one on. All right. So the entry models that we like to use in here, right? The first thing first is an inversion fair value gap, right? I'm going to draw out these just super quick, right? So we have some bearish fair value gaps, right, over here. Okay. So they, right, I'll go into replay mode, just to talk about this. So here I have 3 SIBIs, okay? I have 3 SIBIs over here, and I'm waiting for the 9:30 to open, which is the next candle over here, right? So I'm waiting for time. Why? Because that's what we're taught, and that's why we know when it's going to be extremely likely. So what's happened here? So I have 1, 2, 3 down close candles. I have a small sweep of liquidity here, very close to time. So I'm paying attention to how they're forming. And I've just swept another session low. The only confirmation now that I need is my entry. So I've had sweeps at time. I just need my entry to start targeting the opposing side, right? Okay. So which is the first one? The first one is going to be if I have a bearish fair value gap. So if you don't know what that is, you're going to have to refer to the homework. But basically, it's a 3 candle process, right? And it's from candle 1 to candle 3. It's basically the wick from candle 1 to candle 3 if they are not meeting, right? So obviously, if this wick came down there and that wick came up there, there's no gap between them, so there's no space, right? Again, you'll learn all that anyway. So I just need price to open up at this time now, right? So I need price to open up here, and I need to see a push and close above any of these, or all 3. Some people, if you have one down here, one here, and one above, they would want to see a candle close above all 3. If you're confident with the sweep time entry target, the very first one is all you actually need, but that's going to be down on you to back test and whatever, right? So let's talk about the first entry. Boom. Well, this candle here now, again, I'm on the 5-minute. You're going to be doing this on the lower time frame. What has it done? It's pushed up and it is closed above all 3 of these bearish fair value gaps. So what's that done? That's now just turned all of those into inversions. So 3 bearish PD arrays have now failed. Big indication to me. We've got what we wanted from down here at time, and now I can start heading up towards here. So what you could do, so this is where your buy and sell tools come in, guys, for your markups. I could now stick a entry on where the candle closed, because that's where going to be my entry for a buy tool. Why wouldn't you wait until the 8:30 fair value gap inversion? This one, way later. Don't need to. Yeah, don't need to. But good question though. Really, really good question. But you don't need to, because this time over here has told us, right? And there's PD arrays here. This is an older one. I mean, this is a good one to wait for, but we use the very first confirmation. So in this case, I'm on the 5 minute, right? It's going to be a crazy big stop loss. You don't need to worry about that. It's just an example, and I'm on the 5 minute. So over here, right? I mean, even on the 5 minute, this is only a 1 to 1.4. It's not a great risk to reward, but you can now see that that's what the entry is going to be. I can then target the previous day high as well. This is now going to be 240 points from this point here that you would have called, whatever, right? Obviously taking your partials along the way. Now, again, I'm using the 5 minute here as an example. You're going to be using the 1 minute. But so that is entry number one, an inversion fair value gap. The second the candle closes and confirms that it's not going to come back, or that it's closed above, the fair value gaps, that is your market execute entry, market execute. Okay, so that's entry number one. Now, what could entry number two be? All right, so we're going to remove those. Entry number two is going to be your change in state of delivery. Change in state of delivery, again, not teaching people to suck eggs. Your following down close candles is when a candle closes above the body, not the wick, right? So this would have been it here. Two ways to trade. So it's the last candles in succession, or the last, depending. If this was 10 candles, that was the last move before the up, then you'd be including that. If it's a singular candle, it's just one candle. It doesn't matter. The number is irrelevant, but it's like I said, so it's the last move down before the up. So however many is in here without a break. So if this was a bearish candle, this is a green candle, this would have been the change in state of delivery. Hopefully everybody understands that. You will when you go through the videos anyway, right? So two ways to enter off of a change in state. Most people would grab their buy tool and they set it back on the order block and then cover the swing low. And then we're going to push up, right? And they're hoping that price comes back to the limit, tags them in, does not touch the stop, and then continues. The other way you can do it is exactly the same as an inversion. You can just pull the trigger as soon as the candle's closed, giving you the change in state. Again, this is where your markups is going to come in to play, and you're going to realize, how you're doing it and which one's the best for you. Now, then the final one is going to be your market structure shift, which is extremely similar. And that's going to be the swing high that was created prior. And that is going to be your bullish market structure shift. Again, the videos are going to help you with this with your homework. So now, if you notice on this day, again, let's just assume that this is the 1 minute, right? The inversion was the first one that told you, right? But the actual candle was a structural one. Why? Because this was a structural inversion. Why? Because it gave you a change in state in the same candle and actually a bullish market structure shift, all in the same candle. So you can see the displacement in it as well. This is something that you're really, really nice and you want to be looking for. But yeah, so that is the three main, there's lots more entry examples as well, but that is going to be your three main ones you use. One more, just to show you with the market structure shift, is you would be waiting for a fair value gap, a bullish one to be created, which is going to be this one. And you're waiting for, this is how you use the market structure shift, by the way. Then you're waiting for price to come back down, fill your bullish fair value gap in here, and then continue, right? I know that sounds like a lot. When you've gone over the videos, it's really not. It's super simple. But now tell me, if I play price out now, which trade got you in that trade there? Which was the only one that did? It's the inversion, right? Unless you did do a market execute on the bullish change state of delivery, which most people don't. So why do you think this is one of the reasons why we say to everybody, your best way of learning our model and the best way to be a part of these moves is by always using the first inversion. If you are worried about them working, not working, every single entry on here is the first inversion, right, after time, every single one, right? And there's lots of examples here, and these were all traded live in front of everybody, right? Or most of them. 9:30 exactly the same thing in here, right? It's like so here is a perfect example. They're not all going to be home runs, right? But sweep at time, entry was as soon as we close above the inversion, take something off 50% of the range, and then hold for your overall target the high of the day. This is where you're going to come and get your examples from, and where you're going to come and learn them, right? Or have an idea of. And I promise you, they're all going to be exactly the same. Okay. So is everybody au fait with how to mark up your 15-minute and then your 1-minute exercise for there? How's everyone feeling about that? I haven't been able to finish the homework yet, but it's CE part of the videos. CE is just consequent encroachment of a rate of anything. So all it is 50% of whatever. It's called consequent encroachment because ICT likes it to be fancy, but all it is 50% of anything. Okay, no worries. Feel okay about it. I'll do the work this weekend and journal over. Yeah. So it seems like a lot, guys, right? Kuro, have you got anything you want to add in? Like, I know there is a lot, but as long as you just do it one step at a time, right? It's gonna start making sense. The be all and end all of it is point A, point B. The price makes some highs, makes some lows, right? And all we're waiting for is, we took sell side, 8 or 9:30. Does it go and make it to the other side, right? That's what you got to remember. And then this other stuff is down over here. There's basically 3 entry types, and we tell you the main one, right? If I have a fair value gap that's been made here, and at time, price pushes up and closes above, so the candle body closes above the top or bottom, which depending on which way you're going, of the fair value gap, that's your entry, and did it make it to the other side? Right, so, I know I'm going on quite a bit, but I'm trying to get as much information in one video for you all as I can. So is everybody okay with that so far? Please let me know.
Whoa.
Right. So that is kind of like, so that's the 15-minute and the 1-minute, right? We're going to jump straight onto the 4-hour. Okay. Now, and then we're going to do 2 clean, and then we're going to do a very quick tape read, because the tape reading is going to come with time, and we will do a video on itself on tape reading, because tape reading it's a process that you're going to learn to do. So 15 minutes done, a scribble on the chart. The 1 minute is you're just going to go down, and on the 1 minute, we're finding what highs were taken. We're annotating, this happened at 9:30 on the dot, like the lows were taken. There was a 1 minute entry in here. There was another 1 minute entry there, another 1 minute entry there. And I'm highlighting this, and I'm annotating how much I need to see this. And then did it make it to the other side? Like, I noticed that it made it up to the other high, and it was at 11 o'clock at the end of the AM. So we used an open price to start getting us there. And what time did it make it up there? It's made it up there at 11, which is another macro. Okay, so it's used even time to deliver to my target, right? And that's as much information as you're gonna need, okay, to start with. Remember, this is just baby steps, guys, right? A lot of the other stuff's going to come in time, and we're going to make some videos and probably do it in the same session as this. Next exercise I want you to do, 4-hour, right? 4-hour time frame. Yeah, and this is going to seem tedious, but it will make a lot of sense. So remember, all those drawings that you've done, you've got your 15-minute, you're going to have your 1-minute markups, you're going to put those in, and you do the same process in here, so you can turn them on and off to keep your charts nice and clean. Okay. Now the 4-hour, I'm going to show you a very, very simple way how you can start determining swing highs and swing lows, internal, external, in a market. Okay. So you're going to be in replay mode, right? You're going to find a piece of price action, right? Ideally, try and find a consolidation, which is the hardest piece of price action apparently to trade, right? And I just want you to do these steps. Now, this is only going to be a quick one, right? Because I only actually have to show you how to mark out 2 things. But then as many of these as you can go and do, you're gonna thank me for it later. right? So your two tools you want for this is your line tool and your box tool, okay? Now the box tool over here, I have a clean one here for box. You can mark this out with Bissy and Sibby as much as you want or whatever, or as detailed as you want. So the idea of it is going to be, right, that you are going to find a space in time, right? So let's just say you start here, right? And you're going to be playing price out like this. And all I want you to do, right, is if you don't know what a swing high and a swing low is, again, you need to watch videos for this, is I'm going to be manually marking out every swing high and every swing low. Okay, this is process one, right? You can even mark out the previous ones that have been hit or whatever, right? What else am I going to be marking out? Any inefficiencies in the market, i.e., cough, cough, wink, wink, just going to be your so external, swing high, external, swing low, internal, fair value gap. Okay, fair value gap. So, I just did that. So this one over here, right, if you were marking it correctly, would have been a sell side one. And all you're going to do is mark out, so as price goes, what's just happened? Have I created a new swing high? No. It needs to be 3 candles. So I would play it out once more. Now I have a new swing high. Why? Because it's the highest point between 3 candles. Okay. So now I can mark out this high, swing high, right? What is this? What has that current piece of price just told me, by the way, for anybody that's learning, right? I went from taking external liquidity and I had internal liquidity. Okay. So remember what external is. Remember what internal is. What happened? We took external liquidity, came back up to internal liquidity. That was respected. Why? Because bodies did not close above it. Yeah. And then what happened? We pushed down. Shocker. What did we go to? External liquidity. So we were just talking about this a minute ago. External coming back up. Internal making it to external on a bearish market. Okay. So that is the exercise for you. I'm going to play it out so you can really get the gist of it, and we'll just keep going, and I'll tell you why it's important after. So have I created, oh, by the way, always draw this to where it gets mitigated from as well, by the way. Yeah. So if it gets broken here, I want to draw it out, and it's going to, this exercise really helps you with marking out swing highs and swing lows, by the way. So where's the new piece of liquidity? Well, I have a swing high here. I still have a swing up there. Have I created a new swing low yet? No, because it needs to be deferred candles. So let's see that one. Now I have a new swing low, right? So now I can annotate it. Do I have any new fair value gaps that's been created in this leg? No. So we just play price out. Do I have a new swing high now? Yes, I do. Third, the highest point between 3. Yeah. So you can see how price is making ranges right now. No new swing high or swing low. No new high or swing low just yet. Boom. So we've now taken that one. We've now taken this one. Have not created a new one yet. I need another candle. So I'm going to pull these lines out. Right, they're super important. No new one just yet. Right, so it needs to be the highest or lowest point, right? Just did it. So now I have a new swing low. So what can I do? I can now, mark out, if it lets me. Right, a new swing. I was hoping for a new fair value gap to be printed. I think we get one in a minute. So no new fair value gap got printed down there. This closed. Do I now have a fair value gap? It says yes, right? So I now have a new fair value gap. This one is a bullish fair value gap. Okay. One more candle over. If it doesn't take that high, and I'm now going to have a new swing high. Right, boom. Okay, so what do? I now have a new swing high. This one, right? So technically this bullish fair value gap, what happened? The body closed below. This now becomes an inversion. Okay, let's see what happens after this. Nothing new to add apart from what? We now have bearish fair value gap, right? I know this is tedious, bear with me. We're going to do a few more. Nothing new there. And then boom. So now I have what? I now have a new swing low. Let's just play a couple more forward. And then boom, we're going up for the highs over there. I don't know if that swept it or not or made equals. But yeah, but then also what's happened here? I now have inverted that one as well. And we've now gone up and hit buy side. So right. So the reason for this, yeah, is quite simple. The first part is an easy part to it. And I'm just going to play price out a little bit just so you can see, right? So what's happening? We take sell side, right? We took sell side. We took external liquidity. There was internal waiting. Price came up. It visited internal. It's pushed us external, taking more external liquidity, right? Then obviously we've ranged for a bit. We then had a spike up to what was left. Ooh, some buy side up over here, creating internal liquidity. Don't take that high yet, but look what we're doing. We're creating relatively equals. Yep. And then we come back down. And what do? We fill in internal. Bit of a ranging, right? So not ideal. Then price pushes up again, taking external liquidity, filling what? Internal liquidity, right? So I'm going to remove all those in a minute so it's a bit cleaner there, right? So then what's happened again? Cycle started again. We take external. What did we do? Came into side internal, yeah? So if you actually look, we went from external, internal to what? Back to external, back to what? More internal, like, you know, so, and then the process just keeps going on and on. So this is going to really, really help you understand. And like, once you get really good with this, you're going to be able to start almost anticipating where price is going, right? And I say almost, you're going to be. After this was taken over here, what is it extremely likely to do? What type of liquidity is that? Anybody? Is it internal or is it external? This one. External, right? So yeah, cool. So where was the first piece of internal, right? So this is what this is going to give you, right? This was the first piece. Yeah. Where was the second piece? Where was 50% of your range, by the way? So I'm just going to draw this out. And you're going to start understanding what we're talking about, right? So if external liquidity has just been taken over there, so sweep, right? Let's just say this is the time. Oh, shocker. That was a 4-hour candle. Why am I using the 4-hour? Like, right, at 10 a.m., where am I likely to see price want to head towards? Bare minimum, this one, internal, right? Was that above or below 50% of a previous range? It's below. So where can I anticipate price might want to come to? At least here. You will see me in the Discord and Kuro in the Discord call hundreds and hundreds and hundreds of points prior to it happening by this simple process and stuff like that. Are we always right?
And billions.
Billions and billions. Are we always right? Of course we're fucking not, because sometimes it likes to be a bitch and do whatever, right? But you're putting probabilities on your side. Like, you're putting, so this is external to internal. So this is actually a little bit more than what I was supposed to sort of show, but it is, right? So sweep. So not only are you being repeatedly shown on different time frames, sweep, time, right? Whatever entry, you know, is going to be in here, and your targets, right? In there, you're now seeing external to internal, internal to external. If this fails, this internal, where's it likely to go? Well, the only other bit was here, right? If that fails, where's it likely to go? Up over here. Now, is it going to make it there every time? Of course not, right? But now so just from this one leg alone, let's see how many points that is, shall we? So from this one to this one here, to the very first one, which you should be holding to the first PD rate above or below 50% of a range, right? Times fractal, it doesn't mean shit. Yeah? But this here, it doesn't matter. So technically, it's going to be over here now. Well, now that's 386 points. Obviously, you're not getting in at the bottom tick yet. You can do that later on, or you'll be able to sometimes, right? So even if your entry was up over here, right? It's like 300 points, right? So that can help you have confidence in holding trades, right? Now, so let's go down another bit of a dive in with like sessions and sort of stuff, right? So let's say now that you turn your 15-minute exercise on, and now because you've marked out this day prior over here, right? And you come down over on here. Let's have a look. I need to, where is it? Let's see how this lands. Oh, yeah. Pretty funny, right? You know, like what, I'll just show you in here when this is all happening. Oh, you have a PM trade. Sweet. Time entry target was helping you hold for this one, possibly. You know, your consequent correction of your previous leg, stuff like that. You know, this was from opens. So so if you're going from internal to external down over there, now you're going from external up to internal. What is it? Session highs, session lows. When are you possibly looking to start trading this? So from the previous day, right, over here was a lunch trade. As you come into this day, are you now going to be bullish or bearish in Asia? Bullish or bearish in London? Do you see how it's like, it starts coming together with like how you can start thinking of like where you would like price to go? To see how it all like kind of comes together. Now, obviously, I've just picked a random like fucking spot in here. I haven't handpicked any of it. If you do this massively on the 4 hour, especially closer to time where we are, and then you have a 4 hour folder, 15-minute folder, you will see how certain days come in and it all starts lining up from the 4 hour coming down. So that is basically going to be your 4 hour, what's it called? Your 4 hour exercise, guys, right? It's just simple two lines and a box in between the session highs and session lows, right? And it's just helping you teach between external, internal, and how it goes. Is everybody okay with that so far? I know it's a lot, guys. I know it is. And, you know, there's going to be videos going over all this. Wonderful. Yes, mate. Cool. Thank you. Right. So, last but not least, do you think of anything else for those exercises now? We're gonna cover these more as well as we go into calls, because I'm sure we're gonna have lots of things. Can you think of anything before we do a quick tape reading?
Did you cover range? Like playing at
ranges,
previous range, today's range?
Yeah, ranges are. Oh yes, actually, no, yeah, good point. Actually, let's start off with an approach that you can take before we do the tape reading. Let's do starting on the weekly, yeah, and you'll kind of see about higher time frame ranges and stuff going down to your lower time frame. So it's a good point, Kurt. Right. So when you first come to a chart, right, make sure you're on your plane chart. Yeah, I know that there's indicators that do this for you, right, but it's not going to teach you shit, right? So this is kind of a bit similar that you can think of as doing that 4 hour exercise, right? Shocker, I wonder why we do it. I'm on the weekly time frame. All I need to be looking at on this weekly to start gaining an idea of where price could be going is I want to come, and so this is this week. I want to mark the previous week's low, right? Annotate it. Oh, this is my previous week's low over here. There's my previous week's high. There's my previous week high. Boom. Right? Is there anything else that I should add to this as in inefficiency, right? So fair value gap wise. Well, on the left-hand side of me, there isn't over there. We've come out of one, right? Over here, you can see prices tagged it and filled it, but we have not closed below it, so it's still relevant. So this BISI here, which is a weekly BISI, right, is still relevant, right? Oh, but I don't need to clog up my charts. Is the one above? No, it's not like I can quickly glance. You can put in volume imbalances, right? I pull this out. A volume imbalance, for those of you that know or do not know, is simply a gap between the bodies of candles. It doesn't have to be, the wicks can be closing. A volume imbalance is a gap between a body and the next body. These can help determine the direction of price. So here would be another example of a big volume imbalance. This is a really large volume imbalance, actually. Right, so that is a volume imbalance, guys. So there's another PD array for you if you're a bit newer. Right, I don't need any more information on that chart than that. I don't need to write out every single swing high and swing low. I just want to know previous swing high, previous swing low. Now, Something to take note of for some of you, right? Before this candle open, did this candle here achieve anything? What do I mean by that? Is did it take a previous week high or the previous week low? This one here. Did it, yes or no, guys? Alpha, so this week here, did it take this previous candle high or low? So that would be, this is the high. Sorry if I didn't do that enough. But this one here, it did not take anything, did it? This candle, I'm not on about this week, mate. Yeah, I know you've seen that one. Good, good eyes. Sorry, mate. Yeah, I'm asking this one here. So did this one take a previous high or low there? And the answer is no, right? So that became, it became an inside bar, right? So what does that, basically didn't do fuck all, right? So going into the following week, right, it's a really good indication that it's probably going to be used for liquidity, right? So, and I use this down on the daily today to call the previous day low, the previous day high before it happened. So not only this week have we took the previous week low, and we could be definitely heading towards, from sell side up to buy side, right? That would be a good indication of something that I could mark up. So now I would mark that out, and that would go over into here and go into my weekly box, right? You can see I've got some extra bits on there. You don't need to worry too much about that. But I actually will do one thing. So I'm just going to quickly delete these drawings, right, and show you mine. This is my weekly markup, right? You can see that there. What's this in between? So let's quickly turn that off. I grab the high of the previous week to the low of the previous week, pull price out, and this is my quadrants, right? These are important levels where you can see a lot of price react from and give you a good idea of is midway holding? Is this just a retracement to what? 50% of the previous range before we continue lower, right? So this is a good tool to have on. This is your quadrants in your templates, all right? So you can use that one, guys. So I'm just going to remove that now. So then this was the amount of information I put in. Projection blocks comes later. Don't worry about that. So that was the first thing I did. So weekly, just to quickly recap, because that was a bit long-winded, I'm marking previous week high, previous week low. Is there any fair value gaps very close by or inside? There was no, so that could have been my markup. Quickly jump down onto the daily. Right. Now I have a daily to mark out. Ignore the purple lines, guys. Right. Ignore those. All I want to know is, again, previous week low, previous day low, previous day high. Right. And again, you're going to be annotating these with your templates. So this candle here, did this do anything to the previous candle, guys? This one. Did this take anything from the previous day, high or low? So that would have been the high. This would have been the low. Did this achieve anything? Yep, another inside bar, right? So what did that do today? Gave me a really, really nice indication of draw. I can't remember what the other things was, but I was in a call with Chip this morning, and I said, today is extremely likely for previous day low to go to previous day high. What else did it do? It actually took that previous day low and took the previous day high for the inside bar didn't achieve. So not only now did you see, hopefully you can see this, you see that previous one that was left, and now this day had done both of them. Yeah, it can really, really start helping you. And how do we know that it was going for the lows or whatever? Maybe price was edging its way down towards there. So this is your previous day low, whatever. Come took it. And then that's why we were saying very, very likely previous day high. So sweep, time, entry, targets. Question, John. If you have another inside bar, it looks like our range is smaller. I'm going previous day high, previous day low. Is there higher probability that we take both sides of that range? Yeah, that's one thing that I look for, not only that, I mean, it's just a really nice one when it happens, when you have an inside bar, because it's just a very small range, isn't it? It's not achieved anything. So, you could anticipate possibly to see that on low news event days. Monday is always a low volume day, stuff like that. So that's where you can start looking for it. But the easiest one to look for is maybe on a non-news event day when you're just kind of moving sideways or whatever. So another thing as well that we look for, right, is, how you your sweeps are happening. So you see we swept over there, and then prices coming up in, huge rejection, right? Not closing below previous candles, right? Kind of showing that, hey, here's some internal. Maybe this next one wants to come up for the internal. That tried to come for external. You couldn't do it, or vice versa, whichever way around. See what I mean? So yeah, that's that. So this would be another range, right? So let me just quickly draw this out because this is what Kura mentioned. So then go down to the 4 hour. Right? So now I have previous day high and previous day low. Today's case was sweeping the low and then taking the high, but the opposite could be true as well. If 100%, dude. Yeah. We let time tell us which one it wants, right? We can always guess which one it is, but you're never going to 100% know, right? But over time, like, let's say previous day low, previous day high. If London's up here and it's trickling down here towards the New York Open, it's extremely likely that we come and take previous day low there and then go for previous day high, right? Why? Because this is engineering your liquidity. We're taking already sell side anyway, and this a lot of the time will be low resistance liquidity, which we'll talk about later on, and then you're getting up there. But I am running a little bit away from everything, so I'm going to try and just make sure that we can get these ranges finished. So 4 hour, right, guys? What can we be looking for on the 4 hour? 4 hours tends to going to be a little bit more detailed, right? Where I'm kind of looking, kind of look, I suppose, a little bit outside of the box, blah, 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 whatever. So what happened over here, right? So we mitigated something over here. It's fine. Had we taken external liquidity here and here? And the answer is yes, right? So you see now how the range, right? We've got ranges in there. There's other ranges inside of these as well, but I'm always looking. Hate to go, guys, but amazing class. Learn so much today. We'll be back and see you. Yeah, okay, so no worries, dude. That's why I'm trying to wrap it up because I don't want it to be too long. I am going to end here in a minute. So just super quick, right? If you took external on the 4 hour and we're pushing up, where do we come for? Consequent of clutch from the range. This was the first one. Shocker. Price came up, and that's where it was messed around, right? And then obviously process starting again in there. But so what am I marking out? Marking out just key levels on the 4 hour. The trouble is with the 4 hour is you can get a little bit carried away. On your day, you should just trying to be keeping it as close by to price as possible, right? So maybe you would have this one marked out. Maybe you have a low over here, and maybe you have another range over here, right? Something like that, keeping it a little bit closer to price, right, in time.